Can I file my taxes for my LLC as a corporation to get a lower tax percentage? I run short-term rentals. I host short-term rentals for other owners. I also run short-term rentals in the properties I own. I have an S-Corp with my husband and I work from home. My accountant said I cannot deduct my home office expenses. I know I can, but I don't know how. Could you please explain the steps to do it?
So going back to the first part of the question, LLC as a corporation, as we just said, we never want to put appreciable real estate into a corporation, S or C, if we're holding on to it for a long time. We might use that for flipping, so don't get confused with that. But we wouldn't if we're going to hold rentals, and in this case, including short-term rentals. So no, it doesn't make sense to put it in there. But what you could do is use your corporation maybe as a management corporation that doesn't own the rentals, but it does provide some management services. You get some income into your C-Corp, lots of reimbursements. And if there was anything left over, yeah, it would be at a 21% flat rate if it is a C corporation. So you might have that going on. With the S corporation, though, that you already mentioned that you have, you could actually use the S corporation as a management. But again, we wouldn't recommend having the rentals in there. And then getting to where are we going to do all this running of our businesses from? You certainly can't have an administrative office in your house. And because we are talking about a corporation from the management standpoint, S or C, we have an accountable plan, or you're allowed to have an accountable plan. And one of those reimbursements under an accountable plan is an administrative office. So you can take this, the only rule requirements is that you use that area exclusively for the business. So we don't use it for other things, and that you do so on a regular basis. As long as you meet that, I'm not sure where your accountant is coming from that you can't do it, because you can.
So a home office deduction is a term they use with sole proprietors.
Yes.
So he's probably saying, oh, no, you can't do that. And then a lot of them think you have to rent your house to your corp. And that's not the case. You're reimbursing. It's called an accountable plan, just like Elliot just spelled out. And all you're doing is reimbursing the value of that property in the cost of that room. You use the room methodology. You could use net square footage. You could use any reasonable methodology. You're not stuck like when you're doing a home office, and it's usually quite a bit. Usually it's 15 to 25%, including like if I have a cleaner come in, my property taxes, my utilities, my insurance, it's usually a larger number. In fact, it's usually about 10 times the amount when you actually add things up. And yes, you can absolutely do that. The question is, what is doing what activity? So if I have that S-Corp or a C-Corp, it is the host. If you're doing it for other people, that's where you run it. If you have your own properties, it's going to be in an LLC that is either taxed as a partnership or disregarded to you, depending on how many you have and how it's structured. At the end of the day, it's going to end up on your 1040, and you might be renting it to your host, depending on how active you are. And the reason we're doing that is we want to make sure that if that's a regular activity, if I'm renting it to the S, it's because I want it to be a long-term rental, and I'm going to group it with my other rental activities, and I'm going to be a real estate professional, which I can use the time to qualify for. If I don't qualify as a real estate professional, then I may just self-manage and put that thing in an LLC and let it flow onto me. So the losses, let's say I do a cost seg and a bonus depreciation, I get a nice fat loss. Short-term rentals are 39-year property, right? Yep. So we're going to accelerate a big chunk, and we have to stretch the rest of it out over that 39 years. I could end up with a non-passive, ordinary loss that I could use to offset my W-2 income or other sources of income. So it can be a very attractive strategy, especially for those of you that are in high income brackets.
So yeah, lots of opportunity here, and great question.
Yeah. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.